GM, good morning. Welcome to the Milk Road Show, the daily crypto show where our insights land harder than the corner of your bed on your shin. I'm your host, Jay Hamilton, and today we are joined by Kyle Reidhead, head of research and co-owner of Milk Road. He came on this show about just over a month ago, December 4th, the exact date, and he called the current pullback. He said, this pullback is coming. Watch out, be aware. And, a lot of you guys didn't like it at that time. Things were bullish, the vibes were high. So today we're going to talk about how Kyle knew that pullback was coming, what made his spidey sense go off, and what does that tell us about the rest of the year? Does he expect more pullbacks? How does he see the rest of this year playing out? And what does that mean for how he is allocating his capital when he's taking profit and how he's making sure that he wins in this cycle? Nobody knows it better than Kyle. Before we jump in, you could have gotten a lot of Kyle's research downloaded into your brain over a month ago, not just by listening to the Milk Road podcast, but he also put out a pro report. If you're not a pro member, you might want to go pro today because every week you get a deep dive pro report. I'm talking 10 to 20 page report in your inbox that keeps you on top of everything you need to know about this cycle and so much more that it comes along with that. Before we jump in, let's take a minute to hear from our sponsors who make the show possible. Meet Odos, the DeFi aggregator that makes your token swap smarter, faster, and a whole lot easier. Tired of trading like it's 2019? Odos finds the best prices for your swaps across 900 liquidity sources and 14 blockchains, so you always get more bang for your crypto buck. Whether you're swapping, setting a limit order, or just avoiding gas fees like the plague, Odos has you covered. It's like having a genius trader in your pocket, minus the coffee addiction. Join 3 million wallets already using Odos to power over 6 billion in monthly trades. Start making smarter swaps today at milkroad.com/Odos. Kyle, welcome back to the show.
Happy to be here. First epi in 2025. Exciting stuff.
Exciting. I'm glad you're bringing the energy while the markets are bumping around here, up and down. Today's a little bit up, but let's talk about last time you came on the show was early December. Actually been on the show since then, but the last time we were talking about the conditions of the market was early December, and you said, "Hey, a pullback is coming."
Let's jump into some more analysis around pullbacks and what we can expect here. Let's look at Bitcoin in the last cycle and what it did in January and what you might expect to see this January.
Yeah, I often talk a lot about how this cycle reminds me a lot of last cycle. I think Michael and I, when I was on last week, talked about this, how it just felt very similar. And we were like, this like December 2024 feels a lot like December 2020. And it's interesting because back then, Bitcoin from, I think it was like November to December, went from 20K, which was its previous all-time high, and absolutely ripped to like 40K, right? And then at the end of December, basically early January, I think it's like Jan 3 or something, it had a pullback of like, what is that, 20, 30% at least 30%. That we have, 30% that we have circled, right? That pullback was in, it says how many days? 19 days. Okay. So it took 2 weeks, basically. It pulled back 30% in a time where everyone was so bullish, right? Like Saylor was buying crypto. I think Tesla had announced that they were buying crypto there at some point. We passed the old all-time high. Everyone was celebrating. It was a wild Christmas. It's a good time to be in crypto and go to Christmas. And I hope we get that again this year. But it just feels so similar to then. And, we see the reality there of like, hey, we had this 30% pullback and then we ripped again and went to what, 69K from like 30, right? And it feels like, hey, what did we do here? We went from like 60K or 55K, whatever it was, like a month ago, 2 months ago, all the way up to almost 100K. Feels almost the exact same. Now, maybe we continue to pump a little bit here until the end of December, and then we get the pullback, same date, same time as last cycle. That would be weird. Again, I don't like look at this and go, hey, that happened on Jan 3rd, so this pullback happened on Jan 3rd. I just think like same sort of momentum, same sort of move. It just makes sense that this is going to happen, right?
Why did you call the pullback at that time?
It's actually funny. Pullbacks, when you call them, it's like, I'm excited that I nailed it. And then at the same time, like, well, shit, now my assets are down, whatever. We're like 18% or whatever in Bitcoin and even more than that and everything else. So it's like it's a love-hate relationship in that. But to me, one of the things to understand is that crypto is it's momentum based, right? So it makes these big runs at one time. In a few weeks, we do a double or a triple or whatever, depending on the asset you're looking at. But that's not sustainable, right? And so oftentimes, if you look at the chart patterns of crypto, with these big runs, and then it usually is followed by a big pullback, or at least like a long period of chop for a little bit. Back in December, we had about a month and a half, I guess a month at the time that I started calling it or started getting weary of just this Trump effect, right? Everyone was so freaking high on Trump winning the election, and prices went from, I think Bitcoin went, what were we at, like 70 or 65 or something like that, all the way up to like 100. It was around 100 when I started saying we're going to get a pullback here. In those moments, people were getting very euphoric. Like greed was stepping in, prices on everything else. Like XRP had just done a 4x, right? I think that was the episode. We were actually talking about XRP. Hawktua had launched a meme coin that she rugged. There was just like multiple signs when you start. Fartcoin was getting close to a billion market cap, and it's like these things aren't normal. It's weird when that's happening, and so you need to find a way. And I know a lot of people, they get caught up in that. They get excited. They're like, "This is sick!" Like this stupid meme coin called Fartcoin has made it to a billion. Like I love crypto, and it's like you need to actually step away, take a deep breath, and be like, "But does that really make sense?" And I'm not saying Fartcoin's not a good investment. I think it's still probably above a billion, or it didn't pull back that much. Like it's strong, but it still is just weird. And you need to think, do all these things together make a lot of sense? And then you combine that with like some historical stuff, and more like macro was starting to look a bit shaky. We had a pullback in liquidity starting around then. I think it was even a little bit before that. And so when you looked and you saw, well, liquidity was pulling back, the inflation scares were starting to come back, you kind of were thinking, well, we've done this huge move in crypto, but it's basically fully off of just the Trump effect, which is all speculation. He wasn't actually in office yet. He hasn't actually made a Bitcoin strategic reserve. He hasn't changed any regulations. And so at that point, you're like, well, to me, it's obvious that we've done this run up, but without really the fundamentals to make it make sense. And then just things were getting a little bit euphoric. And so like it's almost a guarantee that when that happens, you're getting a pullback. And so I was maybe a week too early. I think the pullback started like December 17th, and I started calling it around the 4th or 5th or whatever. So it was like a week and a half too early. But whatever. I don't plan to ever get these things perfect by any means. I still thought there was a chance that maybe we'd have a Christmas, like a Santa rally, and we didn't get that, unfortunately. But we had such a big run in November that like it's fine that we didn't continue to go up. We can't have it all.
Please give me my cake and let me eat it too. So before we jump into thoughts for the rest of the year, I just want to focus on this pullback right now quickly because we're still in it. Thoughts? Is it over? Have we bottomed? Do you think that we go down further? We got CPI coming out tomorrow. Actually, this airs on Wednesday. CPI will come out around the time that this airs, so that'll be out by then. We'll see what the impact of that'll have an impact on the market for sure. What are your thoughts for the rest of this week?
Yeah, I don't know for sure. I think when Trump comes in, he's going to start to make moves really quick. And I think that'll start to pump markets. Liquidity is not recovering, and it probably isn't going to happen anytime soon, I would say. The main thing is we need the dollar to go down, and it's not going to go down yet. It might start to go down when Trump comes in. That's what happened last time Trump came in. I think both Trump and Besant both want it down. The new Treasury head, like they both want the dollar to go down, and so I think they're going to make that happen. But does that happen right away? Like I'm not sure. And so I would say probably the next rally happens either from, there's kind of two big things for 2025. It's like there's macro, so the dollar, liquidity, rates, et cetera. Like, is that bullish? Is that not? That's going to lead prices. And then there's Trump with regulation. And is that bullish? Is that bearish? Like, what is he really changing? What's he really doing? And both of those are going to really matter for price action. And so sometimes you might have macro not looking so great, yet prices rocket because some new regulations going in, or the SBR is moving forward, et cetera. Kind of like November. Like we didn't have good macro, but Trump won and prices went nuts. So there's going to be this weird dynamic between the two, and you really got to try to figure those out. And so like this week, honestly, I have no idea. So I don't even want to make a call. I'm not like, I don't know that we've bottomed yet. So I'm not fully like making any moves here. We do in pro are planning to make a move when we think it's bottomed. We're sort of debating that right now as I came on air here. So I don't know. Maybe Monday was the bottom, but I'm not really confident enough to say.
Okay. Let's talk about January from a seasonality standpoint and looking at historicals. What stands out to you about January? What made you confident that January would have a pullback?
Yeah. So my original thought was probably we'd run up in December, the pullback would happen in January. Then things got a bit too crazy early December. I was like, you know what? Maybe we're going to get it early here, which we ended up doing. And then I figured it would continue on into January. And the reason is there's actually this like sort of dynamic that happens in markets, which makes sense as I'll explain this, where it's kind of we almost always get a pullback in the beginning of January. Like if you look at historical charts, in January 4th, 2017, we had a pullback and it lasted like a couple weeks and it was about 30% in Bitcoin. And then if you look last cycle, same thing. January 7th, we had a pullback of 30% in Bitcoin. And again, it's like almost the same thing this cycle. It's kind of funny, but we kind of front run a little bit. But the reason is, if you think about 2024 was a really good year. People made a lot of profits. Same with 2016, same with 2020. People made a lot of money. And so people are going to take profits. I know some of us listening are like, no, I never take profits. I'm only trying to time the top, whatever. But institutions, big money, people that are smart, they're going to take profits. And, when you have a run up like 2024, I think Bitcoin went up 100 and almost 50%. People will take profits. But you got to think about this for a second. If I take profits December 31st, let's say I made $1 million. And so if I take profits on that $1 million December 31st, I got to pay cap gains on that, right? In Canada, it's like 15%. Okay. Which means I got to pay $150,000 on that million. And if I take the profits December 31st, I've got to pay those taxes in March. In Canada, US, that's how it works. We pay in March, right? Which means like 3 months goes by and I've got to pay that. If I just wait until January 1st to take those profits, nothing's really going to change in terms of the amount of profits I take, except for now that's included in my 2025 taxes, which means I don't pay that until 2026 March. And so what happens here is I take profits Jan 1 instead of December 31st. And all of a sudden now I get a loan from the government, essentially, you can think of it. Because I know I got to pay $150,000 in cap gains, but I've got a year and 3 months before I have to do it. So I can go and reinvest that money, hopefully I don't lose it, and try to make more money off of that it's basically a 0% interest rate loan for a year and 3 months, right? So anyone who's smart, who really understands the portfolio, they're not going to take the profits in December. They're going to do it in January. And so this is often why we see these big pullbacks, not just in crypto, but in other markets in January, assuming there was a year previous to that, that was bullish, right? Like obviously 2023, we didn't have that and we wouldn't have that because 2022, no one had any profits, right?
No one had any profits.
So it doesn't make any sense. But here, when you had 2024 so bullish, you knew that people were going to be selling in January. Now, it's not always perfect. Like obviously there was other reasons why people might sell in December, which we sort of had, but we had continued selling in January, likely as a result of that.
Which you just take that, throw it into a yield-bearing stable coin and try to get 15%, and boom, now your tax bill is paid for you.
Exactly.
Like,
And
look at that.
exactly. And you've made an extra, you want to put it in Sky, you can make 12.5% on the year, and now you've made money off of your loan.
Yeah.
You know what I mean? Like it's easy.
Yeah. Okay. Any other times of the year, as we look forward to 2025, any other times of the year where pullbacks might be expected, where these type of pullbacks tend to happen and repeat themselves?
Yeah, I mean, like obviously you never know when a pullback comes, but in terms of like historicals, things to just like keep in mind is okay. So as we just explained, taxes in January, and so people are generally selling in January, but then they're holding it for the following year. So then they actually have to pay back their loan, or sorry, their taxes in March. At least in the U.S. and Canada, it's different in every country, but the biggest capital markets are obviously in the U.S. And so a lot of times you get a pullback in March, generally smaller, because people that reinvested that loan that I'm talking about, they now need to actually pay back their taxes. And so March, you often see a pullback. You saw it in the last 2 cycles as well in March, pretty big one. And then the last one, which is probably bigger, the March one is like kind of, I don't even know if it would really count it. I think it's more of a narrative. And so it happens even if people don't actually sell to pay back taxes. It's just people kind of think it will happen. And so it ends up happening.
They front run it.
They front run it, exactly. The other one, though, that is pretty big and does happen because of market dynamics is sell in May and go away. You may have heard this before. This is true in all markets. And this one's quite interesting. I think probably plays out this cycle as well, or this year as well. It happened last year. It happened the year before that. Both 2023 and 2024, this happened. And the reason why this sort of quote or the saying holds true, or at least we think it holds true, is so if you think about who controls most of the capital and most of the liquidity that's going in markets and is making most of the trades, it is the rich frickin' people, the people that own the banks, the people that have like the private wealth, the hedge funds, like et cetera, the people that hold most of the money. Well, these people are also very wealthy. And so what do when July or June hits? They go on vacation. It's summer. Things are warm. They go to their house in the Hamptons if they live in the US, right? If you're in New York City, you go to the Hamptons. Or if you're in Europe, you generally go to like Italy or Greece, right? Or Spain. And you go and you spend a few months there with your family. You live on your yacht, you live in your beautiful beachfront house, and you just kind of enjoy a few months of summer, right? And so what happens then? You don't have the big people that are there to make the big decisions. And so oftentimes it's not like they just leave the markets and they're all in cash, but they do often sell a little bit. They make less trades. They don't do as much in the summer months, which is why they say sell in May and go away. Because if you even look at liquidity in crypto, liquidity in stocks, liquidity goes down a lot. And so you often see these crazy choppy markets in the summer because there's not a lot of liquidity and there's not a lot of people adding new positions. And so oftentimes you either sort of just chop around or you start to see bigger pullbacks after May. And we see it in crypto all the time. There's an interesting stat. I just want to pull it up here, which is if you look at Bitcoin's average returns by month, its two worst months its four worst months are June, July, August, September. August and September being the worst of those. But the 4 star months are always its worst. If you look at the average of, I believe, S&P 500, the Dow, and the NASDAQ, the worst performing months always between May and October, the S&P 500 performs at just 1.6%. So this is like its appreciation. If you look at all the other months, its average is 6.5%. The Dow Jones, 7.6% on all the other months, 0.7% on the summer months, and the NASDAQ, 2.9% in the summer months, 8.8% on all the other months. And so like a common strategy, and honestly, this might work for most people, is just like sell in May, buy back in September, and then sell in May again. And that's it. You just keep doing that in crypto, except for the bear market years. So one in every 4 years, and you do extremely, extremely well. So that's kind of it for like the typical market dynamics is like January, sometimes March, and then oftentimes summer. It's like better to just get the heck out.
Okay. That kind of leads into something I want to get to later in the show, which is what is your plan for 2025? You're giving a good part of it away and the sell in May and go away and come back in the fall. But before we get there, I want to talk about you have three scenarios that you have laid out, three theses of how you think this cycle could play out. It could be an accelerated cycle, could be a prolonged cycle, or it could be a typical cycle. Can you walk us through these three scenarios?
Yeah, so this is like if you just scroll on Twitter, you read a lot of research, even you listen to this podcast, a lot of people have different sort of thesis on what they think is going to happen this year, right? There is a fairly large group of people who think that like April is going to be the top for crypto, or like March, April, May, something along those lines. It's going to be the top, and that's it. Then we go into a bear market. That would be the accelerated cycle, right? A lot of people think this is the case because growth has really been pushed forward. One, because the ETFs last year. Two, because of Trump coming in back in November. And then we'll see how things play out. But probably if he comes in, starts making crazy regulation, and we have another big like jump forward, then people are kind of thinking, well, accelerated, we're moving all this growth forward. And so top out, sometime in April. That's one scenario that could happen, very well could happen. The next one is kind of prolonged, which is, we've had this accelerated stuff, but macro hasn't really gone our way. And so as macro continues to improve, which, I think you had Michael Howell on, was it 2 days ago? And he said probably not until at least the second half of 2025 will global liquidity start to pick up, right? Which is a little bit different than what we had last cycle, right? Last cycle, it happened much earlier. And so it was this like quicker jump up. And so if macro kind of lags here, then there's a chance that we move into like Q1 2026 before we top out, right? We'll have some ups and downs along the way through regulation and things that Trump does, but the liquidity top out might not be until 2026. And so maybe we have prolonged. And then there's the other camp, which is just like, nah, it's just going to be the same as it always is. Every 4 years, around the same time, like October, November-ish, we top out. Like if you average the numbers of each cycle, I think it's an October top in 2025. We've shown that chart a bunch. And so there's people who think that maybe it's just like a typical cyclical time frame and the rest doesn't really matter. So there's sort of three scenarios. I think there's obviously the super cycle scenario where we just never have a bear market, but I don't subscribe to that. And I think that's ridiculous. So I don't even include that as one of the options.
Like a flat earther to me. Like, what are you nuts? Like, come on. I'm not inviting any of those super cycle people on the show.
No.
Actually, you guys let us know. You guys want us to have anybody listening believe or want to understand the super cycle narrative, I'll bring somebody on the show and they can
If they've
they
got
can
a
tell us.
strong case, I'm down to listen.
Okay, okay, we'll try to find somebody. Okay, so we got three scenarios, and what's really interesting about these three scenarios that you pointed out is that we've had people on the show who believe each of these, right?
Yeah.
So we've got our accelerated cycle scenario. I I don't know that I have anybody yet that's come on the show that like fully believes top is like is in the spring, is like
I've seen
April, May.
multiple like
Lots of
big
people
time investors saying this. Maybe not on the Milker Show, but on other podcasts and in reports. So yeah,
everybody we've had that thinks that's more local top, and then thinks there is that going to be more the second bump up in the fall. We had Jamie Coots on recently from Real Vision. He called typical cycle, right? That he thinks cycle top is August, end of August was his call, so a little bit earlier than like October. Then prolonged cycle, Michael Howell, as you mentioned, just came on the show and talked about how he thinks more like liquidity is going to be late this year and it's not coming until second half, which could lead to a prolonged cycle. Give us your We're all about probabilities as an investor. That's the important thing to understand. What's your probability of each of these scenarios?
yeah. So one thing is my probabilities obviously change like as new information comes in. So understand that currently I'm about like a 10% chance that we have the accelerated cycle. So we top out, in Q2. I'm like 35, it's actually increasing probably like 40% that it's a prolonged. So we go longer. And then, maybe like a 50% or whatever that we're going to have just a typical cycle. And it's maybe like an October, November type of top out. So obviously it's going to depend on what happens with macro, and that's who knows. There's a lot going on there right now, but a lot of it is really going to depend on Trump and the regulation stuff. And this is where things get a bit dicey this year because like you just don't know, even if he's like putting a lot of these new policies in place. Well, how long does it take to actually get voted in? Do they really get approved? Once they're approved, how long does it take for companies to actually take action on these things? And so there's a lot of unknowns with regulatory stuff, which could really change the cycle. And then like, do ETFs change things? People talk about it all the time. So there is a lot of kind of unknowns. But that's sort of my base case. What I'm just going to do though is basically play all of them. Like I've got a strategy where instead of trying to figure out which one, I've always said I'm never trying to time the exact top. And so instead, why not just create a sell plan over 2025 and even 2026 where I can just like achieve all of them, and if any of the scenario plays out, I still will have taken profits. I still will have done well. And that's kind of the way that I'm thinking through this.
Look at this guy. He's scoring all over the place. He's got the plan for all of it. I love it. Before we jump in, the one I will agree with you that the probability for the prolonged cycle seems to be the one that is increasing and there is getting more attention on. And the thing that's interesting to me on that is it is it is very likely that when Trump comes into office, he just says something and that causes the market to pump and we have a great Q1, and beginning of Q2, typical pump that goes through that period, right? Like nothing actually, he doesn't even need to do anything in order
Well,
for that
but
to happen in my
also
mind.
when presidents come in, they always have oftentimes they'll do their like first 100 days where they try to
Yes.
just get so many things passed early. And so I think he's going to do that and he's going to
Yeah.
kind of bull rush it. And so I do think some good stuff will come.
Yeah, so he could easily have some wins in the first 100 days. That gives this pump. I fully buy into that. I think most of us buy into that. Then what I could see happening is Trump really cares about the midterms in 2026. Like that
Hmm.
is
Hmm.
very much on his mind. And he's not a loser, he's a winner, and he is going to really want to make sure that he is well positioned for that. So I could see him strategically positioning some of the later moves, some of the things that take time, combined with the fact that macro might take time and liquidity might come later, that could extend us into 2026. That's sort of one thing I'm thinking now.
Yeah, I mean, I don't know how much he can really change the macro environment, right? Liquidity just has to come when liquidity has to come. A lot of that is around the debt refinancing, which Michael Howell talked about. And like, there's just not much he can do that. Technically, he doesn't control rates. And obviously, he can't really control inflation, though things he does could impact it. And so we're really kind of just, it's a ticking time bomb of like, when does inflation start to go back up? Meaning they have to raise rates again, right? A lot of people are kind of thinking that's now, which is why kind of macro has been shaky. I don't think there's a chance that that's happening right now. I don't even know if that's going to happen anytime in the near future. So we'll have to just kind of see how, the market plays out in terms of macro, which is less a Trump thing. But yeah, I don't know. We'll have to see what happens with his regulations, because obviously those things will impact inflation. So
Okay, let's talk about how you are playing the cycle. How are you doing this? How are you playing all three of these scenarios?
yeah. So to start things off, I haven't sold anything yet. I think that with this pullback here, this is sort of your last chance to buy anything at like a decent risk reward. I'll be honest, I don't think the risk reward right now is even that great. And I think I already said that last year when I was on this anyway. If you really wanted to make the money, you need to be buying, 2 years ago. So like when I have new people messaging me, which by the way, that was one of the other top signals in December. I had a few people that I hadn't talked to for a long time ask me where they could buy Bitcoin. And my worry is like if you have no coins, it's like, yeah, you probably should buy some now, but like these people are probably going to get wrecked. Like if you don't know what you're doing, you're not following Milk Road every day, you haven't been through a cycle before, you don't really understand this. Like anyone buying right now is probably wrecked. We're going to come back down below these prices. But as long as you have a long-term time frame, then it doesn't really matter. So anyway, haven't really sold anything here. Have been looking to make a couple trades in this pullback and a few different sort of narrative stuff. So basically adding a little bit more risk to my portfolio, which I've done a little bit of, and our pro portfolio has done as well. And basically, what I plan to do here is let this ride until probably April. Again, it's going to depend on how fast things move when Trump comes in. But basically, I plan to take 30% of my portfolio and take profits on that in likely April, maybe March. The reason for this is one, I think probably this sell May and go away thing plays out. Whether that's the top or not, I don't know. Also, don't really care. So, going to take 30% profits in case it's the top. And just because this was just my plan all along. I have money in a TFSA, tax-free savings account, where I don't have to pay taxes on it. And it's been in there for a long time. It's in ETH, Coinbase, et cetera, from a very low amount. And so I'm using that to buy the things that I wanted to buy from my investments. I'm going to buy a vehicle, a Tesla, and a few other things. And that's been my plan. If you were following Pro from, I think, 2023, I wrote this plan out. And so I plan to take 30% of my portfolio, sell there, use that for certain things I'm going to buy. I'll leave the rest in. And really, what the plan here is ride that out through the summer. We'll see what happens. Maybe we have a pullback. Maybe it's a big pullback. Maybe it's, like last cycle, 50% plus. Maybe it's not that. Maybe it's some chop. Hell, maybe we just continue to go up. I don't know. For me, it doesn't really matter. Then what I plan to do is come October ish, again, depends on things. Like it's not so set in stone. I plan to take 50% of what's left of that 70% of my portfolio and take profits there. All of those profits, though, are going to go into stable coins that will generate yield. And they're just going to sit there. And then the remainder 50% is just going to be there for the long term. And so whether we continue to go up, we have a bear market, don't really care. It's just going to sit there and remain. This is my long-term holdings. And so essentially what I've done here is I have my first bit where I guarantee I get some profit. So I can pay a bit of my mortgage. I can buy a vehicle, probably take a vacation with my girlfriend, like do the things that I wanted to do and like celebrate that, hey, I was in crypto in the bear market, this time around, and was able to make some big money there. So celebrate with that and do whatever I need with it, take some life chips off the table. Then come October, my goal here is to get these yield bearing stable coins, because what I will do moving forward is I will use the yield from those stable coins to buy back in when the bear market comes, right? So right now anyway, and I don't know how long this will remain, but Sky, for example, if you hold Maker or Sky, whatever you want to call it, you can get 12.5% on your dollars, okay? Which means every month you're making, if you sold a decent amount, a considerable amount. And instead of now taking money that I earned from Milk Road and from Impact 3, our companies, to buy more crypto in the bear market, I don't even have to do that. That money can just stay out of crypto. And the stable coins that I have, I'll just use that to dollar cost average every month. So as that yield comes in, I'll just buy Bitcoin or buy ETH or whatever, in a year from now, 2 years from now. And that's my new way of dollar cost averaging without ever having to put anything into the crypto world anymore. Now, if we have a big enough bear market, I'm probably going to still put a bunch of my fiat money into crypto because that's just who I am. But the strategy here is I don't have to. And so if I want, I can continue to keep my revenue that I make, to my income, to buy other things, homes, vacations, like whatever the hell I want to do. and just use my crypto to dollar cost average back into crypto, right? And then, of course, I already have a long-term bag that will remain. Now, in terms of the actual timing of this is where it gets a little bit tricky because, as I said, there's quite a few people who are ready to sell in April, right? Or in May, sell in May and go away. So this happens. So oftentimes when people know it, that people are going to front run it, which means instead of May, it's probably going to be April where maybe that tops out. That's what happened last cycle. People kind of front ran it. Probably that happens again here. And so do you want to front run the front run, right? Like these are the things you got to start to think about. But the reason why I think we might have a really big pullback in April is not just because the sell may go away. It's because last cycle, most people didn't get to take profits, right? You talk to anyone who was here last cycle, almost nobody took profits because that double pump, we've just never had that in the cycle before. And it didn't make sense to a lot of people. I feel like it was kind of propped up because of SPF and they're taking customer funds, putting them back in to prop up the market. And so that was a weird situation for a lot of people. And so even the experts didn't take profits. And so what I think is people have PTSD and people are just like, I have to take profits this cycle. And so I think a lot of people are going to take profits too early. And I think that's going to be the April profit taking. And so that's why it's like maybe March, maybe you need to get ahead of that because I think it's going to be quite big. And it's why I think we might actually have a really big pullback is because the combination of both sell may go away. So liquidity is much lower. And then crypto people just have PTSD, which then also makes me think they're probably selling too early. And that's why I think we continue. And whether it's the typical cycle in October or November or whatever, or even longer, because it's just going to be against the narrative of what everyone thinks. And so that's why I'm like unsure of those months, but I'm going to definitely leave some on the table to make sure that I can get those profits because there's going to be a weird dynamic in April, May, I think.
There's a weird dynamic every
Always.
day in the markets.
Yeah, very true. Very true.
Welcome to the daily life of an investor. So what I find very, very interesting is you have a solid plan. That's the main thing. You know, everybody listening in, if you don't have a plan the way Kyle has a plan, go pro today because he will teach you how to write the exact same plan, and then you're set and you don't need to think about this anymore. But the thing that also is very interesting to me is you have to be adaptable within this plan because as you said, things change so constantly. It's a wacky, weird world that just keeps getting weirder and weirder every day. So, you know, staying on top of it is and making these decisions as you go. Like you don't know. It's not like you're sitting here saying like, "Hey, I'm going to sell on like April 15th," and like you
No,
put
at
that
this
date on the
price, whatever.
calendar,
Yeah, no
right?
idea.
Like no, right? Like
The-
you don't know the price, you don't know the day. You have to make those decisions as we go. You know, 30%. It seems like you've got that solid in your mind.
Yeah, I know the amount I'm going to sell in terms of a percent. The dollar amount, I have no idea because I don't know what my portfolio will be worth by then. But the key thing to succeed in this is it's all in the mind because you need to accept that you're going to leave profits on the table. Your goal is not to try to make the most money because that means you're putting on the most risk. Your goal is to make money and then just consistently make money year over year, right? That's how you actually make the most money. It is not try to make the most money this year. If you do that, you will completely fuck up. And so the hard part though is taking profits in April when you actually truly believe that the top is not for 6 months later. It means like, let's say, I don't know what your portfolio would be worth, but let's say your portfolio is at $100,000 come April. And you've done the math. Like currently it's at 50,000. You're like, by April, it's going to be 100,000. This is sick. But then you're doing the math and you're like, well, but I really think the top is in October, November, and it's going to do a 2X in them. So like, if I just hold until October, November, I'm going to have $200,000 instead of 100,000 in April, right? So most people go, well, fuck it, I'll just hold until October. But then we top out and you don't ever get that chance. And that's why you need to just accept that you are going to leave profits on the table and instead just take pieces out. So like if I take 30% out, right, of let's say it's worth 100 grand in April and I take 30%, I make 30 grand and that's chilling there. Now that's 70 grand. It's not going to 200. Like I said, it's going to go to 140, but that's okay. You know what I mean? Like technically I'm leaving 30K on the table because I'm not going to get the double on that 30K, but at least I've guaranteed that I've made 30K. You know what I mean? Like this is the thing you've got to try to wrap your head around, but it's so hard for human because like we are just innately greedy. That's just how humans are. We always want more. And so it's a mind fuck to try to allow yourself to take profits, even when you know and you're pretty confident that it's probably going to go up more. But it's all about risk, right? Like you've got to learn to manage that. And if you can't manage risk, you're never going to be a good investor.
Wise words. Wise words from a multi-cycle veteran. Kai, thanks so much for joining us today. Everybody, let us know What's your plan for this cycle? Are you got a plan to sell? Do you know when you're selling? If you don't have a plan, as I said, I don't mean to say it again and again, but just go pro. Like the money that pro costs $25 a month. You will make way more than that with your investments this year. This year for
You
sure,
already would
100%
have. We had,
guaranteed.
yeah, like, come on. It's nothing.
The number of calls that have been made, not to mention the community that's there, that's super active, yada, yada, yada. I don't mean to shill pro so much. You guys can make your own decisions, but it is well worth the money. Thanks so much for listening in, everybody. Kyle, we look forward to having you back on the show again in a couple weeks. Have a wicked awesome day. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your #1 resource to help you invest successfully in crypto. One final note, this show is for educational purposes only and nothing we say is financial advice. Investing in crypto or any asset is risky and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.